we just finished the explanatory aspect of the final account for traders. So in this part 2, we're going to be looking at an illustration on the preparation of the final account, which is trading account, profit and loss account, and the balance sheet. So we also have adjustment to this account, but that will be taken care of in subsequent classes. So we're going to have adjustment in terms of prepayments, adjustment in terms of accruals, adjustment in terms of depreciations, adjustment in terms of provisions. So we have classes for these various adjustments. So basically, this is preparing trading profit and loss account and balance sheet without adjustments. Okay, so let's understand this before we now go to classes for the adjustment. So let's go. Here it's a question. You can see here they said from the following you are to prepare trading profit and loss account and balance sheet as at 31st December 2018. So we have the items here. We have sales, land, purchases, returns inwards. Okay, we have carriage inwards, rent, warehouse expense, motor vehicle, equipment, bank loan, bank overdraft, salaries and wages, capital, returns outward, discount received, discount allowed, opening stock, debtors, cash, goodwill, closing stock. So with all these items, we are required to prepare trading profit and loss account and balance sheet as at 31st December 2018. So let's quickly show the trading profit and loss account. Now we see here trading profit and loss account for the year ended 31st December 2018. Remember, your trading profit and loss account is a function of your what? Turnover, cost of goods sold, other incomes, and total expense. So we have turnover here, which is note 1, 405,000. Now, how did we get 405,000? That's the note 1 here. So note 1 here is a function of what? Sales and returns inward. What is sales? Goods sold. What was returned inwards? Part of the goods sold that was returned back to the business. So our sales, according to the question, is what? 455,000. That's what we've picked here. And then we have returns inwards. According to the question, returns inward is 50,000. That is what we have here. And because return inward reduces sales, so we are doing sales minus returns inward, which is 455,000 minus 50,000. That gives us 405,000. That is what has been quoted here as turnover. Turnover here, 405. The next one says cost of goods sold. We have 278,000, which is note 2. How did we get that? That's the note 2 you see here, cost of goods sold. Remember, your cost of goods sold is also called your direct cost. So what are the functions of your direct cost? Any cost incurred to bring the goods to the point of sales. You purchased. You spend money to bring it in. That's carriage inward. You return some back to the supplier. That's return outward. You had an opening stock. You had a closing stock. So your opening stock increases your cost of goods you want to sell. Your purchases increases the cost of goods you want to sell. Your carriage inward increases the cost of goods you want to sell. Returns outward reduces the cost of goods you want to sell. And your closing stock reduces the cost of goods you want to sell. It's just logical. Okay? You had 10 products before you commenced the year. You bought additional 20, makes it 30. You spent money to bring them in. That's the one you put. That will increase it by the cost. You return some back. Let's say you return 5, brings it down to 25. By the end of the year, you had 3 left. Means that you have actually sold what? 22. So that's why you have here your cost of goods sold, which is your opening stock, 30,000 naira. Purchases, goods you purchased. If you come to the question, you see your purchases here, 240,000. Okay? You have your carriage inwards. Come to the question. Carriage inwards, 35,000. That's it. So you have your returns outward. Come to the question. Where's your returns outward? Look at it here. Returns outward. See, 20,000. It will reduce it. That's why you're bracketing. You're deducting. So if you add your opening stock to your purchases, to your carriage one, then less your returns outward, you have 285,000. And then you now have a closing stock of what? 7,000. Look at it here. 7,000. So when you take it out, you have 278,000. So basically, your what? Closing stock, which is here, look at it here, 7,000 has been deducted to get your 278,000, which we're not bringing here as cost of goods, so 278,000. So your gross profit is simply turnover minus cost of goods sold, which is 127,000. Now you have other income, which is note 3, 45,000. So let's go to note 3, other income. So what are the functions here? Is discount received. So come to the question. What's discount received in the question? 45,000. That's what we're having here, 45,000. So you bring that 45,000 here, other income. You add it to your gross profit. You have 172,000. This becomes your what? Gross income. So you less your what? Total expense. That's note 4, 140,000. What make up your what? Note 4. So you have to pick it up in the question. Okay? So look at our note 4 here. Based on the question, our note 4, which is also called total expense, admin, overhead expense, or indirect cost. We have rent. So what is the rent in the question? 58,000. We have warehouse expense. From the question, we have our warehouse expense here to be 25,000. That's what you have here. We have salaries and wages. From the question, our salaries and wages here is what? 32,000. That's what you have here. Then we have discount allowed. The question, discount allowed here is 25,000. That's what you have here. So from the question, we're able to identify 4 items: rent, warehouse expense, salaries and wages, and discount allowed. So when you add all together, you have 140,000. So that is what we have here as total what? Expense. So when you take out total expense from your gross income, you have your net profit, which is 32,000. Loss is in bracket. In case your total expense is higher than your gross income, this is going to be a bracket. So net profit, that's positive. If it's a loss, then it's negative. But because this is positive, it is a net profit. So that is preparing the trading profit and loss account for the year ended 31st December 2018. Now they say we should also prepare balance sheet. So this is the what? Balance sheet. You see statement of financial position as at 31st December 2018. I told you when you hear statement of financial position, you're also referring to your balance what? Sheet. And what your balance sheet is? A statement that shows your total assets and your total liabilities. What are total assets? Business properties, business resources that the business has. And what are liabilities? That's what the business is owing to others or the owner of the business. So you go to the question, pick your assets and pick your liabilities and what? Group them. Remember I told you, I said that your assets can be non-current assets, which is also called fixed assets. We have current assets, we have other assets. Okay? So now, this is the statement of financial position, which is also called the balance sheet. So we have our assets here. Non-current asset, also called your fixed assets, is 815,000, which is note 5, giving us items that made up 815,000. So let's go here. So as you can see, note 5, non-current assets. What are the items? Land. Land from the question is 240,000. So that's why we're picking 240,000 here. Motor vehicle from the question here is 325,000. That's why you're having 325,000 here. Office equipment from the question, we have equipment here, 250,000. I guess we had just 3 items making the non-current assets. So when we add it together, 240 plus 325 plus 250, we have 815,000. That is what we have here, non-current assets, 815,000. So we have other assets. Okay, so from this question, the only item here as other asset is what? Goodwill. If you don't understand other asset, go to our class on double entry and for assets and liabilities. There I explain in detail what assets are, how assets are classified. I also explain in detail what liabilities are and how liabilities are classified. So you can go there and refresh your memory on that and come back to this question. So other assets here, we have goodwill. So how much is it? According to note 7, we have 10,000. That is what we have here. Other asset, note 6, 10,000. So when you add 10,000 to 815,000, you have 825,000. So we have current assets, 107. Note 7. What are the the notes did not align. Okay, so let's quickly correct the notes. So it's aligned now. We have current asset to be note 7. So here's note 7. What are the items? Cash at hand. You go to the question. Your cash here is 45,000. That's the cash here, 45,000. That we're picking here. Debtors. Come here, you have debtors, 55,000. That's what we're picking here. Then we have our closing stock, 7,000. That's what we have here. Remember, the stock are unsold, so they're part of what the business owns. That's current asset. So when you add all together, we have 107,000. That's what we have here as current assets. Note 7, 107,000. So when you add 107 to 825, remember your 825 is 815 plus 10,000, which is 825. So 107 plus, it will give you 932,000. So the next one is what? Your liabilities. You classify liabilities into long-term, short-term, and owner's equity. Short-term can also be called current liabilities. So what are long-term liabilities? Here we have note 8, 600,000. So our long-term liability. So we have note 8, long-term liabilities. I think the only item there is bank loan. So what's bank loan in the question? We had 600,000. So basically you must know the items that make up this classification. So your long-term liabilities is what? 600,000. That's bank loan. So that's what we're quoting here as long-term liabilities, 600,000. The next one is your short-term liabilities, note 9, 120,000. So what are the items that make up your short-term liabilities? So we have note 9, I think it's just bank overdraft. You can have some other items depending on the question. So you're going to tell what is long-term, what is short-term. Okay, and I explained this in detail in what? Double entry for asset and liability class. Try and get familiar to that class. They are all on the YouTube channel, Jado's Consulting. So we have bank overdraft here, 120,000 based on the question. So we pick it up here, short-term liabilities, 120,000. So when you add 120 to 600, you have 720,000. So we have owner's equity, note 10, 212,000. So let's go. What make up your owner's equity? Look at it. We have owner's equity here. We have capital, 180,000, which is what the business, the owner has invested, right? And then there's a profit of 32,000. If you remember, go to your profit and loss account. Remember this? 32,000. That's the profit that the business made for that year. That will increase your what? The owner's equity. Okay, I told you that profit or loss. Profit will increase the owner's equity. Loss will decrease the owner's equity. So you invested 180,000 as capital. You made 32,000 as profit. That will increase it. So there's no drawings based on this question. So when you add 32,000 to 180, you have 212,000. That's what we have here as your owner's equity. So if you add owner's equity 212 to your what? Long-term and short-term liability, which is 720,000, you have 932,000. Remember I told you, I said in the balance sheet, your total liabilities must be equal to your total what? Asset. So your total asset here is 932. Total liabilities is what? 932. So that is the illustration on preparing trading profit and loss account and balance sheet, also called comprehensive income statement and what? Statement of financial position. So I will encourage you to pick up questions and then try preparing your trading profit and loss account and balance sheet. If you have questions or clarifications, you can reach me on 08136506356, or you send me an email, jeremiah.dosu@gmail.com. Drop question in the comment section. I'm there to reply you with an answers. And don't forget, we have adjustments to the final accounts, and that is very, very, very important. So we'll be taking other classes to explain this adjustment to the final account in terms of prepayments, accruals, depreciation, provisions, as it affects trading profit and loss account and balance sheet. Thank you.